Okay, we're going to kind of go back. I have a few people comment every now and then that we go through the charts too fast. They don't completely understand why what the analysis is all the time. So we're going to kind of go a little bit slower. I would say a little bit slower. I've got tons of stocks to look at tonight. But let's just kind of go through why prices move like they do. And this is all in kind of the oh, not the assumption, I can't think of the word, in the category of if we know what happens in certain prices and patterns or certain signals and patterns, that we've got a huge advantage by being able to anticipate what should be going on. For example, we could see in the Dow when it broke out through this wedge formation that we probably have a new dynamic, same as this right here. So that gives us a lot more confidence to go into price patterns that we know are going to be moving up. Now, logic says if the market's going up, most stocks are going up. That's logic. Except before candlesticks came along, I could, even as a stockbroker, I could be recommending stocks and the market would be going up and they could still be going down. And so unfortunately didn't have any format or any platform other than the analysts of Wall Street saying, oh, this one should move better because their earnings are good and their sales are good, blah, blah, blah. What we want to do is find out what everybody is saying or doing based upon price movement. The NASDAQ also at a critical spot, right smack dab at the breakout point with a doji. So we've got a lot more insight into what should happen at this level based upon what usually happens after a doji. If it opens lower, we're still stuck in this range. If it opens higher, we got a doji sandwich to the upside, which means this level is being breached. And if it's a doji sandwich setup, we know that there's more upside that we're in the next wave. And in the futures area, crude oil just not doing a whole heck of a lot. I'm afraid crude oil is going to be kind of stuck in a range. But again, that again, it's just my opinion. And the one thing you should be learning when you start learning to analyze candlestick charts on your own is you don't listen to anybody's opinion. The only opinion that you should be interested in is what is the market telling you. Gold is telling us it's still in a strong downtrend. Now, the fortunate thing about the graphics of the candlesticks is because we've got so few indicators on here, like our moving averages, it's pulling back. That was obvious from the doji gap down and stay below the T line. Where's our likely target? Gold could be coming back here. That could be one target. But because we can see there was a trend and now a counter trend, it gives us the opportunity to put anything on our chart that we know everybody else is watching, such as the Fibonacci numbers. That could be your first target. That could be your second target, kind of corresponding with the 50-day moving average. That could be another target. Now, when I say target, that doesn't mean it's going to one of these spots. It means if it gets to one of these spots and we can see by candlestick signals that that's where they're reversing, then we know that was the level that everybody was waiting to buy, or this was the level that everybody was waiting to buy. So we can put things on our chart that we know everybody else is watching and have a much more clear analysis of when people are starting to step in again. All right, so that's gold is the only thing that seems to have any projection to it as far as the futures are concerned. The dollar is still drifting lower and lower, which isn't bad for stocks because um, when you start using Fibonacci versus our regular analysis. I don't understand the question. No, I don't use Fibonacci. I just put whatever might be a possible pullback, and one of the possibilities is Fibonacci numbers. Other possibilities are trend lines or moving averages. Anything that we can think of that might correspond to a pullback and seeing it reverse and coming back up, we can put on there. We're not using them. We're just trying to figure out where there might be a reversal. Sound is really low. Let me see if what's happening here. No, my sound is good. Is that any better? That made it a little bit louder. All right, sound is good. All right. Okay, so what we want to kind of concentrate on, no sound problem. Okay, yes. Yeah, we want to find out where that's the advantage we have with candlesticks is we can see when there's a reversal. And then we can put anything on our chart to see why it reversed at that particular level. Okay, so what we're kind of evolving into, hopefully, is not only using the technique of candlesticks, which is the graphic depiction of human nature, which seems to be the most reliable analysis for projecting which direction a trend is going. When I first started teaching people candlesticks, it was because it was a method to kind of control your emotions, and that if you used it correctly, that you would dramatically improve your investing. And so over the years, I've kind of moved away from the fact that if you use candlestick signals correctly, it has an inherent ramification, which is it teaches you how to invest correctly. So a lot of people go out and say, oh, I want to try this guy's method of trading or that guy's method of trading, which skips over a very important step, which is, first of all, I want to train myself on how to invest correctly and then apply it to somebody's trading method. So that's the same thing we should be doing right now is utilizing a trading method that, again, has very high probabilities of being correct, using that for our discipline, but also in the process of learning what to be doing to trade correctly. And part of that is finding a trading program that works well, but then refining it so that you understand it, and then going even further of utilizing it or refining it to the point where you've taken your emotions out of the trading, that it becomes more of a chart analysis versus having your emotions get involved. So what is the best recommended time chart for swing trading options using candlesticks? Sam, that's up to each individual. If you want to be real quick trading, where you're trading 5-6 times a day in and out, you might use a 1 minute and 5 minute chart combination. If you want to be a little bit slower, it might be a 5 minute, 10 minute chart combination. If you're swing trading over a 2 or 3 day period, it might be a day using the daily charts. And when the daily charts get out of whack, you go to your 10-minute chart. So that's going to be up to each individual to kind of test to see what is the best chart combination for the time frame that they'd like to be trading. All right, so as you can see, there are a lot of chart patterns that work extremely well when we know the overall market trend is still kind of a steady uptrend. And I say steady uptrend because we can see that the Dow has been moving up very nicely ever since the wedge breakout. But the other indexes, even though they've been moving in an upward direction, not with the same resiliency, the same magnitude. It's just much slower. But the overall analysis is they're not selling this market off, but there's still a lot of bullish sentiment. It'd be something like this that would tell us, oops, now there's a drastic change of investor sentiment. Start changing your perspective. So if we've got a very slow uptrend like this, the assumption is a lot of stocks are going to be moving up in this uptrend. But if you're an investor, you don't want stocks that are just moving up. You want to take advantage of the situations where the stocks that you're putting money in are moving with a lot greater magnitude or force, so that you're making good big profits when the market's heading up, and vice versa. You're making good profits, good strong profits on the way down. So we're not looking for uptrending stocks. We're looking for positions that have that much more force moving in them. So, for example, our recommendation on BLCM was based upon a J-hook pattern with a T-line crunch, a doji confirmation, knowing wave 1 and wave 3 should be about the same magnitude, giving us a very strong price move with the market moving up, or the market not going the other direction. Kind of the same scenario on BPMC. Made perfect buying with the Morningstar signal here until we saw the sell signal. Morningstar signal. Now we've got kind of your McMuffin. The Morningstar signal followed by a doji sandwich breakout, or a morning sandwich, the McMuffin. So that combination tells us we probably still have more upside for a couple reasons. You're going to have an uptrend because of your Morningstar signal. You're going to have more follow-through because of your doji sandwich. Plus, your doji sandwich occurred right here at the breakout level. That pretty much told us now we're in a new dynamic that we're going to be heading higher. If we can find the trade setups that are going to produce much stronger returns than just an uptrending stock, for example, we recommended CORI today because there's our Morningstar signal. If this is a J-hook pattern breaking out through this area, tells us we've probably got a good percentage move to the upside. So we do have things like SQM. When the market is moving up, you can see how the J-hook pattern, and now we're starting to get a parabolic move on this stock. And we're in the overbought condition. We're starting to move away from the T-line. We now get ready to start taking profits based upon any confirmation of a sell signal. For example, safety stop right now is right here, just below today's low. If it comes down through there, that's a pretty good indication that our doji spinning top up here in the overbought condition is now showing a change of investor sentiment. When the market's moving up and you've picked out some good stocks like a 45 degree, this is one of the strategies that somebody can set up without that much, having to go out and learn a whole bunch of different strategies. If you understand the 45 degree, if you concentrate on that, that makes for a good trade, whether you're buying stocks or options. So the benefit we have of knowing what the investor sentiment is based upon our best friend signal and then a 45 degree puts you in situations where, again, the probabilities are pretty strong you're going to be making money off of these trades. A J-hook pattern setting up in SRPT. If this is wave 1, the percentage move, if they break out through this level, if you were buying right in here, the first spot to watch is see if they can get through this level, and if they do, now you've got the potential magnitude of this type of price move. Let's see what else we got here. KORS. Observe the obvious, a kind of a fry pan bottom, and notice what they did coming out of this congestion area. They gapped it up. That gap up, creating a pattern, just gives you that much more credence that there's been a change of investor sentiment, that it's creating the pattern that we expect. ABEO also had a wave one coming out of the fry pan bottom, wave two. It backed off today, but it looks like it's already trading higher. Still suspect that this one will create a wave three of this magnitude. So why we're here, the other side of the coin is successful investing is finding the best trades to have your money in, if that's the correct English. Finding the best trades to be in with your money. How's that? So essentially things like that every trade's not going to be working. For example, this is why we will do a session on entry strategy. Few people bought this on the positive open today. Now, I would have been a little bit more cautious if I was going after this to make sure they were starting to trade this positive instead of opening it and started immediately trading it off. There's two things you can do on a positive open. You sit for 30, 60, 90, 240 seconds and see if once they open it, if they're backing it off, you don't get in it. But if they back it off and then come back up through the open, that's exactly what you expect. Plus, it's moving in the direction that you expect it to. That's where you can be buying. Yes, ABEO might be a 45 degree, or it might be another strong move to the upside. How they open it tomorrow will be a good indication of how fast they move it. So today, if you did buy it here, what did it tell you when it closed down here? That it wasn't breaking out, close out the trade. So part of successful investing is already having the mental preparedness to say, all right, probably about 1/3 of my trades aren't going to work. Now, when you kind of, let's say, preempt yourself with that knowledge, that gets around the emotional stigma of, boy, got into a bad trade. I can't close it out right now because that would make me look stupid that I analyzed it was time to get into a trade and immediately went against me. That was my thinking for years. Yeah, I wouldn't necessarily be shorting it because it's not showing us any major reversal. It's just telling us that we're still sideways. There's better short situations out there. Just because a stock has reversed from an uptrend doesn't necessarily mean go into a downtrend. This means it's not time to be in it. So one side became acclimated to the fact that 1/3 of my trades weren't going to work. It took the emotional stigma of, boy, was I stupid to get into this. I'm going to hold on to it to see if I can get back to break even or see if it'll come back up the way I thought it was. I can now say, this is a trade that didn't work, close it out, let's move on to something that has a better chart to it. So again, part of learning how to trade involves what to do when the trade doesn't work and doing something quickly so you can take that money and move to some place where you've got better probabilities of making money again. Tim, yes, there's no way to say set up a system to know whether it went south 10 minutes after you bought it or an hour. Got to remember, if you're buying based upon a daily signal, you usually have to sell based upon a daily signal. And you can't be discouraged by the trades that you get out of quickly. That you oh, I forgot what I was thinking because I was already reading what Carol was writing. Now I forgot what I was even forgetting what I was forgetting about. That's just a fine howdy do. I'll come back to it. I'm in that stupid train of thought on Teva. I had options and I have lost most of their value. Do I hang on since I've already lost my position? Carol, there's a lot of times where if I've gotten into a position with an option trade and basically the options become worthless or not worth very much, I just keep them just in case they pop it again. But it goes along that same theory that probably 1 out of every 3 of my option trades are going to go bad. So the ones that go bad, I can say, all right, that was the bad one. But the ones that go good, if I bought puts on something and it triples, quadruples, sixfold, that well offsets the losses I have. So you can't get hung up on the fact that you're going to make money on every single trade, because you're not. What you have to do is look at each trade and base it on, should I be back out of this trade quickly and move on to something else? And a lot of people say, oh man, I've got a profit. I better get rid of this real quick so I don't go to a loss. That's the wrong way to do it. You let your profits run. You close out your losing positions quickly so you can move on to another one. Now, that's what everybody tells you to do. Fortunately, with candlesticks, the graphics tell you when to do that. But when the FLSR, can you do a class on? Yes, we'll get it. We'll be doing classes on stop losses and entry and exit strategies. I think tomorrow we've got a one of the basic candlestick signals. Wednesday, we think we're going to do the basics on options, but maybe next week we can do an entry and exit strategy. Don't get discouraged when you exit a trade. Yes, if you get into a trade and it goes against you, don't get discouraged by closing it out quickly, because if you're trading, which I've discovered through the years, that if you close out a bad trade, you're going to feel bad about it for about 3 minutes. Then you're on to something else, looking someplace else to put your funds, or hopefully your other trades are working well so that your losing trade was just part of the cost of doing business. Okay. If you are getting all the money off the table, then you are taking too much risk. You're getting all the money off the table. All right. Still having issues with the intraday. John, I had that same problem. Is if I'm buying something based upon the daily chart, that's not the right one, then I hold it based upon the daily chart. If I start looking at the 10-minute chart, saying, oh man, maybe they're turning it over. Got to remember, prices move up and down all day long. What we're looking for is what is the final decision at the end of the day. Yes, if you set a stop based upon, now you set your stops, whether you're trading stock or options, based upon a price where it shouldn't trade. And Steph, that's exactly why we want to be teaching here that if you buy based on a buy signal, you sell on a sell signal and a confirming indicator that it closes below the T-line. There's lots of times in the past where I would have closed out here. Now I know, well, let's see what it does at the T-line, because, again, the most important feature of the T-line is it's not something that everybody has on their charts, where the 200 and the 50 and the 20 are things that everybody have on their charts. So they act like magnets because everybody's watching to see what happens at those levels. Nobody has the T-line on their charts, or the amount of people that have the T-line on their chart is so minuscule, it's in the category of nobody. And so if you use the T-line, which has kind of a direct correlation of what the price is doing, again, the most powerful analysis is if the candlestick signals are the graphic depiction of human nature, and the T-line acts like a natural support and resistance level, like a Fibonacci number or natural human nature number. When you combine the two, you've got a very, very powerful trend analysis. Okay, I've got way off track here. I forget where we were. Did we do ABEO? Yeah, I want to see this again because of the pattern. Fry pan bottom, J-hook type pattern. Today was backing and filling. If you're long, you stay long. If you're looking to buy this, you just wait for it to come back up through the close of the big day. That tells you the profit taking's over and wave 3 is still in progress. Yeah, but we don't care about the 3 EMA and the 8 EMA crossing. We're not buying the crossing. We're buying the signals. There's your best friend signal breakout. So if we just stick with the signals themselves and the patterns, use everything else as a correlation, or not a correlation, a coordinating, a confirming indicator. Look at Labu, left-right combo, smack dab on the T-line. Now, I say smack dab on the T-line. Again, if very few people have the T-line on the chart, and look where they have a tendency to trade. This makes it very easy that if it opens positive and breaks through this downtrending channel, what do we got going? A J-hook pattern with wave 1 and wave 3 likely to be the same. Oh, and Netflix. We did Netflix. Just how long do we hold on to this one? Until we see a sell signal and a close below the T-line. Why did we think there was going to be a strong uptrend? Because look where our left-right combo occurred, right smack dab on the 50-day moving average, a close above the T-line. And what they do the next day? They were still buying after a very strong bullish signal. So I often get asked the question, how many days does it take for your signal to confirm? And the answer is 0. If this is our signal, what do we expect to confirm the signal? A positive open the next day, or any positive trading the next day. So the fact that it opened positive, you see it still trading positive, you can start jumping in when you can see that they aren't selling it off, because that basically is confirming this signal. Now, where's your stop loss on this signal? Well, the probabilities say if it opens positive, we should be going in this direction. And the Japanese rice traders make it very simple that if this is the candle that told us the bulls are taking control and they open it here, where should they not close it? They shouldn't close it more than halfway down this candle, because that would tell you the bears are still in control, get right back out of the trade. Yeah, Moneyball, but even all the people that are trading on the internet, I say all the people, even a good percentage of the people that are trading like in chat rooms like ours is still so minuscule compared to everybody trading around the world. Netflix has a best friend. No, more of a left-right combo. This is not really a best friend because you want to see a gap up, but this is why you want to know the nature of each signal. Notice when it pulled back. Notice it wasn't very decisive. Oh man, it's already 8:30 and we're not even a tenth of the way through. All right, might have to take a 2-minute break where everybody can call out for pizza. We might be here for a while. But the fact that they opened a positive today after trading back very indecisive just told us the uptrend was still in progress. I would say, yes, Netflix is probably still a buy. Not as good a buy as it was down here. But if it breaks out through this level, where's our next likely target? Probably up here testing the highs. Latressa, that's better. A lot of people go to sleep while I'm talking. So eating is a big plus. Now, some of the biggies, like Apple, this is where a lot of people say, well, what should we be doing with Apple? Or a chart like Apple. And this is where, again, the advantage of having the visuals of candlesticks help us tremendously. Which way is Apple moving right now? Nowhere. So if you can look at this and say, this isn't a very good chart, either bullish or bearish, what do? You just go right on and to something else that has a much better chart to trade. Amazon, kind of the same scenario. What's this doing right now? Probably wouldn't be long or short Amazon at this point. Now, Nugget, in the options room, we bought puts last week because, let's see, we have a dark cloud here. Gold itself had a doji gap down, and then notice where this closed after the dark cloud signal, below the T-line. How long do we hold on to this one? Until you see a buy signal. More than likely, want to see what happens with it at the 50. Apple, a dark cloud? No. Remember what the definition of a dark cloud is. This is why when we do the basics of candlesticks, just some very simple rules of each signal. What's a dark cloud have to do on the open? It has to open above any of the trading range. What did I just do? Look at the dark cloud here. It opened above any of the trading range of the previous day, not just the body, above the high of the day. And where did it close? It closed more than halfway down this candle. And where did this all occur? When stochastics were in the overbought area. Is it possible for a trend to reverse without one of the major signals? Yes. But the reason I became so intrigued with candlesticks back in the days when nobody knew about candlesticks, back in the late 80s, is I would go through and I'd say, all right, logic says if we are at a top or if we're at a bottom, what is this right here? And I'd go through my little index book that I had at that time, which was very antiquated. Say, all right, that's a bullish engulfing signal. Things rolled over here. What did I have? Oh, I had a few dojis, and I'd go and say, all right, dojis, shooting stars, selling off. Then I had a kicker type signal starting back up. I had a dark cloud. So I would just go to the tops and the bottoms and say, all right, what type of was our signals here? And I would find that probably about 85% of the time, there was some sort of candlestick signal. So there's always going to be times where you see a reversal, but it doesn't have a real signal. But my theory is out of 10,000 trading entities on any given day, your scans are going to find the best or find good buy signals, candlestick buy signals and good candlestick sell signals, which we know what the results of them should be, versus one that doesn't have a reversal signal. So why not go with something where you know what the probabilities are versus something where you don't know if it's going to be. Now, when I see a reversal and it doesn't have a candlestick signal reversal, my first inclination is, all right, it's going to be a bounce, not necessarily a full-scale reversal. Jim, hold on to your individual ones until we get to, if we ever get to the end here. Again, Tesla is a good chart. And so this is where your analysis becomes very educational. Is that the word? Look at how Tesla started back up with a kicker signal off the 50. Now we're back up in the overbought area. However, we don't have a sell signal. So what we want to do is we want to find the charts where the probabilities are dramatically in our favor because we can recognize what type of pattern is setting up. For example, HRI. What do we got here? We can see a hammer signal and bullish confirmation smack dab on the T-line. What's that tell us? Positive trading can make this a J-hook pattern. And what's our upside potential? Well, there's wave 1. Wave 3 would be the same magnitude. So the more we can recognize of all the signals, which one is the most powerful? Joel, that's the exact reason why we're having the training this Saturday, is for that exact question. The kicker signal, as far as an individual signal, is the strongest candlestick signal. But the combinations, we got plenty of combinations, like the left-right combo, the best friend, the gap ups from signals. Kicker signal is your strongest of all the individual candlestick signals because it has the gap built right into it. It opens here and closes here. That's what creates the dark candle. Then they gap it up. Notice where they opened it. Above the previous day's open. And which direction did they go? They went in this direction. That's meant they kicked this this trend in the opposite direction. That's your most powerful individual candlestick signal. With a stock like Nugget, do you also look at gold? Yeah, gold is going to be a factor. So if this is gold and it's trading like this, that means more than likely Nugget and JNUG, anything related to gold, is going to have the same direction. Now, that doesn't necessarily always mean that, but probably 95% of the time, yes, they're going to correlate. Same scenario with crude oil. If crude oil is in an uptrend, more than likely a lot of your oil-related stocks are going to be in an uptrend. Doesn't have to occur 100% of the time, but the correlation is usually very strong. If you have an inverted hammer followed by a bullish engulfing signal, BRKS, I don't, in the overbought area. Oh, no, that's not a, that's more of a kind of a belt hold type signal. That's not a left-right combo. That's just telling you, remember, a left-right combo is usually going to occur when your stochastics are in the oversold area. This is just telling you they couldn't close it below the T-line. You're still in an uptrend. All right, we're still getting way off track. That's a kicker type signal, yes. Does a kicker need to open above the highest point of the previous day or just the body? Just the body. Remember, the most important factor of the candlestick signals, and that's exactly what the Japanese rice traders did for us, is the two main factors. Where does it open and where does it close? That's why they enclosed it. So when it opens here and closes here, even if there was a tail here, as long as they open it above where they opened it the next day and went higher. All right, let's see. Well, we're getting further behind. You better order 2 pizzas. Okay, OCLR. This is what you call your trend kicker. This is what we call convergence analysis. The more pieces of information we can converge into our analysis, the better off we are. Notice how we started with a doji sandwich down here. Then we opened here and closed here, kind of a failure at the 50. Next day, they gap it up and did a doji above the open of that day. And what's our simple rule of the doji? They're going to move it in the direction how they open it after a doji. So they open it positive and trade positive. What's that tell us? It tells us we've got a bullish flutter kicker signal, which means if we took this little flutter out of here, we'd have a kicker signal. Again, the kicker signal being the strongest of the candlestick signals. And where did this all occur? Right here at the breakout level in this area, as well as the moving averages. What'd that tell us? That these weren't going to be resistance levels anymore, that we probably have a lot more upside to go. So when we can add little pieces of evidence based upon each candlestick signal, there's our left-right combo on net tees, followed by a big gap up and a big day. What does that tell us? Remember, very simple rule of candlesticks. The bigger the signal, the more compelling there's been a change of investor sentiment. So would a scan for a gap be good to identify kicker signals? Yes. Or you can just set up your scan for kicker signals. Now, most of the time, because kicker signals don't always occur every single day, but if I scan for kicker signals, which I know is my most powerful signal, I may not necessarily find a true kicker signal on that scan, but more than likely I'm going to find 2 or 3 charts that look very strong. So even that scan alone will provide you with numerous positive trade setups. For your scan, do you set a minimum for volume and price? Yes. My trading universe is stocks trading greater than $5. The simple reason for that is most brokerage firms won't margin stocks that are trading below $5. And I know that every time I put on a trade, that the probabilities are in my favor that that trade's going to work. Again, the probabilities are. So I want to get as much leverage as possible. I want to be able to margin if I can. And then I usually have a minimum of maybe 200,000 shares a day so that I'm not having difficulty getting in and out of that position each day. So that's my trading universe. That takes the 10,000 trading entities down to about 3,000. And out of the 3,000, I can scan, and each day I will find way more trades that look good. So the process is, which ones are the best looking of those good ones? And that's, again, what we're going to kind of, that's the whole point of this weekend's trading or training, was the accommodation of people saying, well, how do we find the best ones? There's 20, you just pointed out 25 good stocks setups today. How do we find the best ones? And this is what we're going to be going through. Not so much so that you learn what's the best trade setups. Again, we're going to go through about 13 or 14 involving the dojis, signal gap ups, pattern breakouts. Once we go through those in detail and explain why they work that way, then the final portion of that training is going to be that we're going to go back through them all again, but we're going to start with the best one and work our way down to the least best one. Now, that doesn't mean the least best one is bad at all. It just means it's the least of the best. They all work well, extremely well. Yeah, so Feng, notice the wedge breakout. See if I can draw this. And I apologize that we're going to be late today. I was going to try to notice the little wedge, and it broke out. So we got wave 1, wedge, wave 2, now going into wave 3 that could have the same magnitude move as this right here. Is Monday webcast like this recorded? Yes. John, yes, that's going to be the problem is, let's say you're trading a stock that's thinly traded. Now, obviously, if the stock trades 140,000 shares a day, but it's a $55 stock, more than likely, unless you're ultra wealthy, you're not going to go in and buy 2,000 shares of a $55 stock as one trade. If your whole portfolio is 125,000 and each position is $15,000, I just, is that right? Like 20,000. You're only going to be buying 400 shares. So, but if you're buying $50,000 per position, you don't want to be going into a $5 stock that only trades 200,000 shares a day, because that means you're buying, figure this out, 10,000 shares of a stock that trades 200,000 shares a day. You're buying a hefty chunk. You're going to be at the mercy of the market makers, that if you try to get out, it may take you, I don't want to have to sit around for 10, 20, 30, 40, 50 minutes to try to close out a position. I want to close it and move right on to something else. And there's enough stocks out there with good volume that you don't have to be caught in something that doesn't have very strong volume. So anytime I can see a pattern, like our fry pan bottom, I'm looking for the breakout. That tells me there's going to be more upside. That's the exact reason why we recommended SGMS the other day, because you can see the fry pan bottom setting up, and we were getting close to the breakout level, which it did today. What's our expectations from here? More upside, because that's our expectations coming out of a fry pan bottom. That's why NVIDIA came out of this wedge slash fry pan bottom, and what happened? Bam! They just took it up hard. This is going to be the process of our description of why these signals work so well, or these patterns work so well. And because they do work so well, it's not like you're having to do any high-fangled scanning. They're all visual. You can see when things are setting up. Hubs has a kind of a fry pan bottom and a little smaller fry pan bottom right here. ANET, you can see the small fry pan bottom. What did it do today? It broke out through the top. What's that tell us? We probably got another strong move to the upside. Does FANG qualify for a doji sandwich? Not quite, but it has that same characteristic. So what's the worst case scenario? It's telling us we're at least in a 45 degree off of here. What's my expectations for NVIDIA tomorrow? No idea, but I would assume we're still going to probably be in a 45 degree. OA would have been nice. Yeah, but that didn't have anything that was really, truly something that told us to get in. So you can't cry over the ones that you don't catch. What we're trying to do is make money on the ones that we do catch. That's why we recommended Rambus today. You can see the fry pan bottom. You can see the slow, what you wanted to call this, all a fry pan bottom and or a little cup and handle. But notice the confirmation of why they were taking it back up. Look where a Morningstar signal occurred, right smack dab off the 200 back up above the T-line. And there's our double doji setup. What's our double doji illustrate? AO was a buyout, so you couldn't really see see that coming with a quick situation. But we could see this one coming because if you have a double doji, what's that tell you? There's consolidation, but the consolidation isn't very compelling. If it opens positive the next day, that told you this consolidation's over, you're still heading up. That was the same rationale here on Netflix. Consolidation, 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 not very compelling. They're taking it back up again. Cry over the ones you catch and the slippery devil goes back into the lake. That's true. And WST, this was just a clear visual. There's your fry pan bottom. There was your J-hook pattern. There was your confirmation, the gap up, telling you exactly what you expect, what we call the classic, fry pan bottom followed by a J-hook. Oh, if Rambus opens positive tomorrow, yeah, it'd be kind of considered a doji sandwich. All right, what other ones? Oh, AXTI was one that we recommended a few days ago. Again, because of the fry pan bottom, notice your dimple right here. Morning star signal starting you back up. You just stay long on this one. So what I tried to do tonight is try to find the ones that show you where the strength is coming in. Look at our little wedge again. I can do this. You can see kind of the wedge formation breaking out to the upside. Now what is our next expectation? Probably coming up to the 200-day moving average. How did it break out? They gapped it out of this pattern that everybody could see. MZOR. Same scenario. Fry pan bottom, J-hook. How did the J-hook pattern start? More bullish engulfing. What was this signal today? There was your little trend kicker. They opened it here and closed it here. Today they opened it at the previous day's open and went the opposite direction. That's a very good indication that there's a lot of strength there, and if there's still a lot of strength there, what's that tell us about this pattern? That we probably have a J-hook pattern in progress. Most of these charts are not coming up for me. Oh, Louise, I don't know what to tell you. Jim, can you help her out? PEIX. This is a T-line crunch. Notice how it keeps pushing it right up through. If this opens positive tomorrow, what do you want to be doing? You probably want to be buying as quickly as possible. Because where do you think everybody and their brother is watching? They're watching to see what happens when it gets to the 50. We can see there's a T-line crunch. If it opens positive, we want to be buying immediately because more than likely if it starts moving up, everybody's going to see that it didn't resist at the 50. They start coming in, adding to hopefully our profitability. Again, there's that trend kicker signal. Opened here, closed here. The next day, today, they gapped it up, opened it at the previous day's open and went this way. That implies there's more upside. What is that? Is that BFR? T-line crunch. So what happens when the T-line crunch pushes through? Everybody and their brother can see that the 200 wasn't acting as a resistance. Bam, they start taking it up. So if you're watching this, kind of a little bobble breakout, but when it opens here, you have a lot more confidence, and this is where you should be anticipating what should happen because of this type of pattern, that once it hits here and everybody sees it's not resisting, they're going to start adding to your profitability immediately. Oh, this could have been 90 seconds, 2 minutes, 4 minutes, the fact that you saw that it kept creeping higher told you, oh, they didn't open it and take it the opposite direction immediately. And what's the worst case scenario? If you buy it here, where do you not want to see it close? Back below the 200. T-line crunch is crunch between the other moving average. Anything that you can see is acting as a resistance level. It could be a trend line. It could be recent tops. In this case, it was the 200. And you can see how the T-line kept crunching it right up through that level. The bobble. See how it hit, failed, came back up through. The bobble pattern is just a high probability J-hook pattern. We saw that occur on a recommendation of Steelcase. When it came back up through, we were buying because what did it tell us? That the 200 or the 50 was not going to be acting as resistance anymore. We probably had more upside. And what's our big pattern? Kind of a little scoop type pattern. V-neck. Setting up for that bobble makes this very simple. If we know this is our fry pan bottom, this is our bobble, and what do we expect coming out of a bobble? It's kind of a more defined J-hook. If this opens positive tomorrow, you can be buying right away with the expectation your next move is going to be the same magnitude as this move right here. So this is why you want to learn what the high profit, high probability trades are so that you're not sitting around saying, oh, what should I do here or there? You know exactly what to be doing. There's our bobble breakout on ERII. So what's our trade strategy on this? Notice how if we did the bobble, couldn't really close below the T-line. They gapped it back up above the 50. And what's our strategy tomorrow? Well, we know if it opens positive, the probabilities after a doji is it's going to move positive. You can be buying immediately. Louise, you might have to log off real quick and log right back on. Get a better connection. SM, there was your double doji pullback right to the 50. Look at your fry pan bottom. Another one you can be buying. Where's a potential breakout to? Up here to the 200-day moving average. So the more pieces of evidence we can add to a chart that we know has a big, strong price pattern to it, the more you can cultivate your trades so that you're in high profit trades. The worst case scenario is it doesn't work. You come out with a small loss. Your medium case scenario is it's still going to move in a positive direction. You're going to make a profit with it. And your best case scenario is you get a big, huge price move, which is exactly what we want to do. We want to be making hay while the sun shines. We just want to be making a lot of hay while the sun shines. So here's a case where a bullish engulfing right off the 50. Look for it to come back up through the 200. Look at your belt hold signal, right smack dab off the 50. This is why the graphics of candlesticks tell you exactly what's going on in investor sentiment. Where was everybody buying? As soon as it hit the 50 and they took it right back up. Now what type of pattern do you have setting up? A J-hook pattern. An ITCI, what type of pattern do you have setting up? Your J-hook pattern. There's your hammer signal right smack dab on the T-line bullish confirmation. The probabilities are extremely strong that if this starts trading positive tomorrow, you're heading for your next wave to the upside. What does human nature normally do, especially after you have a strong price move? Profit taking. What happens when the profit taking is over? You continue in that strong price move. I would probably wait for it to come up through the 200 on an SSW. Halo, what do we expect here? Probably the continuation of a 45 degree. Notice where this broke out. Coming out of this downtrending channel. So dip in a J-hook if it does not go below the T-line, resistance or T-line, yes. That's why the T-line becomes a much more effective indicator that they aren't going back below that level. Where did our double doji setup occur? Right smack dab on the 50. When it told you they weren't going to come back below the 50, what was your first target? Fill in the gap. What's your next target? Probably the 200-day moving average. Oh, Tristan, hang on to your individual ones until I tell Jim to do the double line. You can be a buyer on positive trading on this one tomorrow. Just then you watch to see what happens once it gets to the 200. So here's another one that notice what happened. You had your best friend gap up, creating this fry pan bottom breakout. This is what we expect from fry pan bottom breakouts, is that big price move. OIS, kind of your double doji again. You can still be a buyer of this one on positive trading, because what it doesn't do is comes up and fills the gap. If it goes further, it's heading for the 200. Essentially, you're visually watching to see what everybody else is watching. We just have the graphics that are much more clear telling us what's happening. There's your J-hook pattern again. And where did it support? A doji, right smack dab off the T-line. What's our doji rule? It's going to move in the direction how they open after a doji. So if this opens positive, what's our next projection? Wave 1, wave 3. All right, same scenario on the downside. If you're looking for some short positions, well. There's your failure. Notice what happens. This is why I always say watch to see what it does once it gets to the 50. Doji, shooting star, bearish doji sandwich. Where's your next likely target? Probably coming back down to test the low and or your next wave to the downside. EVH. What's the relevancy of this chart? Well, you can see the bearish dumpling top. And where is this all occurring? Basically closed right there on the resistance or the support level. So if it opens lower tomorrow, what's it tell us? That this wave is over. We're going into the next wave to the downside. That was EVH. And FTR, kind of the same scenario. This is working out real nicely here. This is where you observe the obvious. What's the direction of this trend? Down. As soon as we see buying, where's our next projected target? By testing the lows down here, another 20%. And EGRX. Failure right here at the 50. Where's your next target? Probably down here or possibly down in this range somewhere. But the fact that we failed right here, notice all the indecisive trading when we got here and kind of a bearish engulfing signal. If it opens lower, there's a good possibility you've got a big percent move at least down to here, if not lower. So once again, we're visually looking to see where the probabilities are of where the big price moves are going to be. So the whole point of finding the best trades based upon what I call the top ranked signals and patterns is so that you don't have to decide on 20, 30, 40 stocks that are out there, which ones might be the best. You've already got a cultivation process to say, all right, I may not trade the 14 best top-ranked signals patterns. I may only trade 3 or 4 of them and learn those extremely well. If I was trading, which I do trade, I trade off the fry pan bottom, the best friend signal. I'm leaning more toward the left-right combo and the kicker signal. With those 4 trade setups, I will have more trades than I'll ever be able to handle. I do not see the symbol right now. It looks as the screen is frozen. Yep. I don't know. So again, the reason we're doing the training this weekend is so that you do have a much more concise analysis of where you should be putting your funds, where the probabilities are that you're going to have the strongest trades. This does 2 things for you. 1, puts your money in the most effective trade setups, and 2, it kind of teaches you or gives you a discipline of that if you're looking at charts, you don't have to say, all right, do I do this one or this one? You now have a discipline that says this one has the probabilities of being a better trade setup than these others, and you stick with your discipline plan. So again, part of this, do you include slow curves when you say J hooks? It's kind of a J hook is a strong price move followed by that pullback and then curling back up, whereas a slow curve may not necessarily be preempted by a strong price move. It might be a sluggish price move and then a slow curve, or it might be a very slow uptrend with a slow curve. So we'll be going into that in much more detail. All right, so let me put this in here. Somebody was asking what the link was. That's a link for the weekend. What time do you put picks in for the 19th? Before trading starts or after? Now, usually the night before, and sometimes it's 5 o'clock the previous evening. Sometimes it's midnight, depending on how much I've got to do here. But it usually should be there before the market opens the next day. Now, remember, the picks have picks. The picks are so that you can look at the charts and analyze what the analysis was for those to be picks. The important factor is you want to have your own scan set up, because the picks I put out are just the ones that look the best, but the next day they may not open correctly. And maybe all 3 of the picks don't open correctly. Well, you don't want to be sitting there without any opportunities. If you've done your own scans, you probably have 4, 5, 6 more to look at to see if any of those are opening correctly. So you're always going to have a situation where you've got more supply of picks if you do your own scans, which gives you the opportunity to cultivate which ones of those picks are the absolute best. Okay. Before Jim does the double line, are there any general questions on candlesticks? Oh, somebody was asking whether they could just buy the training. Yes, if you want to get the best price, just buy the training. Even if you can't make it, then Abe will send you the video of it. And essentially, like anything else, if you're going through and you're not able to see the live training, you just write down the questions you have and just email them to me, or do them here in the chat room. We'll go through answering them. Okay, I guess with that, Jim, go ahead and do the double line. I don't know where that just came from. All right, and 3.1 seconds to the next double line. For some reason, oh man, look at the, do you adjust your stops for outside the normal trading hours? No. After hours? No. All right, let's see how many we can get through tonight. Unit, nothing there. Oops. Yep. If you're short, you stay short. You could probably even be going short on weakness with a wave 1, wave 2 going into wave 3. That's a good looking short. Smart Sand. You stay long, except if it closes weaker tomorrow, especially through the 50, close it out. That tells you they've run out of steam. Silica, you stay long as it stays above the T line. Let's make these a little bit bigger. DVAX, kind of a little wedge. All you can do on this one is stay long as it stays above the T line. Whiting, you can be buying this one, especially on positive trading. It's picking up a little bit of steam here. Then just stay with it as long as it stays above the T line. DSW, you stay long on this one, except you've had a doji getting up here toward the overbought area, doji harami. Put your sell stop just below today's low. If it comes back down through there, you probably hit the top of the trend channel. Lit, stay long. This looks like, this is lithium. Stay long, but you can see how it's gapping up. Have a sell stop someplace. My safety stop, if it opens positive tomorrow, would be, you wouldn't want to see it come back below today's open. Let's see, I can't read what. You put your stop loss. You don't want to see it trade below the T line. You got a wedge. If it trades down through there, it's broken the bottom of the wedge. Best Buy, another one that if you were long, it has to open positive tomorrow to stay in it. If it opens lower, it's lost its trajectory. Rite Aid, big fry pan bottom. You can see how when it broke through the 50, it came back, used the 50 as support, then your doji sandwich. I would stay long on this one. Now use the T-line as your stop. Herbalife, get ready to short this one on weakness. The dumpling top. There's a big gap here that's probably coming back down, which means they could fill the gap back to the 200. Whoops. I lost my spot here. This is a fine howdy do. Oh, we're getting down to the starting. MDXG, nothing. I wouldn't be short right now, but I wouldn't be long. That's not a good trade setup. Teva closed below the T line today. You should have been out of it. And more than likely, when you start seeing it back off, you know where the first target's going to be, back to the T line. So anytime I see something soggy like this, I come out of it, then just get ready to buy it on the next strong signal. Micron, stay long. Use a safety stop somewhere, like at today's low. If it comes back down through there, the profit taking has started. Disney, nothing here. I wouldn't be long or short Disney at this point. No real great trend movement. Schlumberger, you can see the big fry pan bottom. If you like it, you stay long on this one. AMD, has to open positive. If it opens lower, still wouldn't be in it because you can see you'd be caught in that sideways trend channel. The Russell, stay long. Still moving up nicely. Tiffany's, stay short. With your bearish engulfing signal gap down, Stay short. Obviously, watch to see what happens here at the support level at the 200. First Solar was one that if you bought it on the positive open today, again, I would have waited to see whether they were trading positive, but it should have been closed out at the end of the day if you had gotten into it, because it's back in the trading channel. ACAD, just stay long as it stays above the T line. Robot, stay short, but you're gotten into the oversold area. The likely target is the 200, but you had a doji today. It shouldn't trade up above the high of the doji. If it does, it tells you that's where they've bottomed it out, which would equate to this bottom over here. If you're short, you take your profits at that point. JDST, stay long. You're bullish engulfing, gap up. Another gap up. First likely target is the 50. Just see what it does once it gets to the 50. SMTC, nothing. Not until, yeah, that's just a nothing chart right now. Lots of indecision. I would rather be a buyer showing a strong signal up above the T line. JB Hunt, stay long if you like this one. It's not going to make you a whole lot of money, but it's moving in the right direction. ENVA, big breakout. If it opens positive, look for a 45 degree. There's still a gap to fill right here. Again, big best friend signal, doji gap up. Just stay long. Now, if it opens lower tomorrow and you were long, you close out the position, take your profits, then just get ready to buy it back if it comes back up through the close. The probabilities are if it opens lower, they're taking profits. If it opens positive, you've got a 90% probability they're going to be taking it higher. XON, AXON, not a great looking chart. Boy, I don't know what to tell you. Just it's not a great looking chart because of the lack of trend to it. You're still in this congestion area. I'd be trading someplace else. AVEO, if you're long, you can stay long on this one. Another one where you want to see it break out through the top of the wedge. We did Netflix. Netflix is still trading higher. You can still be buying this one if it trades up through today's high. ESIO, stay long, but anticipate now that it's going to travel along the uptrend. I think we did this one. This one has to open higher and stay above the T line. We did Silica, Boeing. Stay long on this one. You can see the little scoop type pattern, and you've broken out into new territory. And the way they got there, you can see, was right here at the peak. They gapped through that area, telling me the next wave is in progress. SID, just stay long. A bullish Harami tells you the selling has stopped. You can get ready to buy this if you like this. Just make sure it's got good volume on positive trading tomorrow. AMGN. Likely target is coming back to test the T-line. That was told to you by this bearish Harami doji, and it trading lower the next day. So it's probably coming back to test the T-line. If you're long, I wouldn't want to see it close below the T-line. Big breakout, kicker type signal. Expect a 45 degree at least off of here. That was QDEL. Hertz, after it was downgraded, looks like the profit taking or the downgrade selling might be over. I'd start looking to buy it if it closes back up above the T line. Yes, Bob, we can do a scanning session. They're very simple to do. We'll try to do that on a Wednesday night. Again, tomorrow night, we got one of the major signals, the basics. Wednesday, we're going to do the basics of option trading. And I think it's me again on Thursday. You're stuck with me all week. Yield, another one that you should be out of and shouldn't be back in until it does close back up above the T-line. Lumber liquidators, you should be out of and shouldn't be back in until it closes up above the T-line. Zenga, fry pan bottom, I'd be more apt to buy it if it broke out through the upside up here. Udell, a bullish kicker. Yeah, kind of a kicker signal, but this is more compelling that you had a, usually a kicker signal has a big dark candle, then another big green candle. Home Depot ran out of steam up here after you saw your left-right combo. Started trading lower. Where do you think the target is going to be? They're coming back to test the T-line, which they have done. If you're long, it needs to open positive tomorrow to stay in it. And nothing real great on CLVS. Strong signal, just not a great looking chart. And AJRD, another one that you can get back in on positive trading. You should have been out over here. Now you can think about getting back in. UVXY for a short. Oh, let's see. Yes, you can stay short on this one. I wouldn't short it here. There was your doji gap down. I would have been shorting it right in this area. But if I was short, I would stay short. Wayfair, I wouldn't go long just yet. You want to see more confirmation that a J-hook pattern was setting up. If you've got a J-hook pattern, what can we expect? That this wave and this wave will be the same, which tells us they're breaking out through this area. You've got somewhat of a wedge there, yes. Just make sure your volume is good on this one. So you do have a little bit of a breakout on this one. Still okay to go long, yep. Then you don't want to see it close halfway down this candle because that's the candle that told you the bulls are starting to take control. And beat, stay short. Wouldn't short it here, but I'd stay short at this point. With the anticipation, your next target is the 200-day moving average. SGRY, slow curve. If you got back in it, you should have been out of it in here. I'd be more apt, if I was going to buy it above today's high, telling me this slow curve or J-hook is, or fry pan is working. FCF, not anything to get real excited about. You hit the resistance level, this level and the 200. If it opens lower tomorrow, you close out the position. Again, because of the doji rule. Stay short on BVN. So you see a buy signal confirmed. I think we did SRPT. Just, yeah, J-hook pattern, stay long. We did SGMS, fry pan bottom. DLCM, stay long on the J-hook. And CELG, all you can do is stay long as it stays above the T-line. All right, everybody. Hope you got some good information tonight. Again, we got a busy week. Tomorrow will be one of the major signals, basics. Wednesday, we're going to do the basics of options. Thursday is me again, and then Saturday, 4 hours of light droning. So bring lots of coffee if you're planning to join that session. All right, everybody, have a good evening. We'll see you bright and early in the chat rooms. We'll see you.